Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. Goldman Sachs says Bitcoin and Ethereum hit bottom, and it's time to buy. According to a former Goldman Sachs executive, the price actions of the two leading digital assets tend toward historical signals. Powell states that the crypto market is about to begin a boredom phase, which usually indicates the start of a new bullish run. Macroeconomics expert and a former Goldman Sachs executive, Raoul Pal, explained that the price action of BTC and ETH are about to create history. He explained that both digital assets are at crucial support levels. Pal told his 991,000 followers on Twitter that BTC has reached the peak of its oversold region. Thus, long-term investors have a good chance of buying the dip now. Based on the long-term trend on the Metcalfe's law adoption curve at 2 standard deviations, BTC's cyclical low is at its most oversold territory ever. According to Metcalfe's law, a network's value is directly proportional to its number of users. Pal explained that this adoption rate for Ethereum has reached a critical support level. He added that ETH's current price lies on the long-term log uptrend of the Metcalfe adoption curve. Pal, also the co-founder of the Real Vision Group, stated that the amount of dollars in supply circulation or USD liquidity largely determines the prices of crypto assets. He added that it is no wonder that the ongoing crypto winter and the sharp decline in global liquidity are happening simultaneously. However, Pal believes this trend will be reversed soon as central banks no longer have a choice but to change their hard stance on aggressive rate hikes. Global liquidity is about to experience a massive change based on the effects of the recession and a change of policies by central banks. The start of a boredom phase and a bullish run. Pal argues that the crypto market is about to begin a boredom phase, which usually indicates the start of a new bullish run. However, he cautioned investors not to expect this phase to be exact. Instead, what is important is the context behind this phase. The former Goldman Sachs executive further explained that crypto cycles involve an increase in positions following the end of a long-term uptrend. During this phase, investors' fear and disgust are at their peak. However, a boredom phase follows this fear and disgust phase. Pal also said the boredom phase is a period of coming to terms with the market's good and bad news. Then, extracting vital lessons from these events. He added that there is zero leverage during this period, and everyone can start afresh. Pal further said he's noticed that previous episodes of low 30-day realized volatility often coincide with lows in the crypto market. According to him, this magic level for BTC is currently at 20%. Each time BTC reaches this level, it usually precedes a more significant leg higher in an early bull market. He added that ETH currently has a similar structure. However, ETH's crucial 30-day level is at 40% compared to BTC, which is at 20%. Cryptocurrency prices rally in disinflation trade. Bitcoin bulls fight US CPI jitters. Bitcoin price prints new weekly and monthly highs as bulls fight inflation fears and US CPI jitters. Experts are awaiting softer inflation figures while disinflation trades ahead of US CPI report push cryptocurrency prices higher. The inflation rate is expected to slow for a 5th consecutive month to 7.3%, the lowest level since December 2021. The U.S. Bureau of Labor Statistics will release CPI data for November on December 13 at 14:30 Greenwich Mean Time. Experts anticipate the inflation rate to slow for a 5th straight month to 7.3% in November 2022. Bitcoin price printed its weekly and December high. Analysts argue disinflation trade has gotten ahead of itself. US CPI data for November could indicate slowing inflation. The US Bureau of Labor Statistics, a principal fact-finding agency for the United States government, will release US Consumer Price Index data for November soon. Inflation rate is expected to drop 0.4%, from 7.7% in October to 7.3% in November 2022. This would mark the lowest inflation rate since December 2021. The Consumer Price Index measures the change in the prices of goods and services contained in a basket of consumer items, and this plays a key role in price stability in the U.S. economy. Therefore, the central bank pays very close attention to this figure. Core CPI, which leaves out volatile food and energy prices, is released at the same time and is expected to come out at 6.1% from 6.3% previously, and to maintain a MOM change of 0.3%. Core CPI is arguably as important, if not more, than the headline figure in terms of its impact on financial markets. The US dollar index, DXY, under pressure for weeks, has begun to seal higher lows on daily timeframes, potentially setting up dollar strength for a rebound. By the way, if you want to support, please support by liking the video and subscribing to our channel. This, thanks to inverse correlation, would spell trouble for crypto markets across the board. Quite an ugly 4H about to close here, looking like a lower high on 4H timeframe and lots of catalysts upcoming this week, Blunts wrote in a Twitter update on the day. DXY also putting in a higher low on daily and looking strong. My gut is telling me we're en route to a new low sub 15K for BTC, which I will happily buy. A previous post from December 5th called for the $15,000 zone to be reached in Q1 next year. Fellow trader Dr. Profit meanwhile noted that DXY had returned to a key breakout zone from June, and that short-term Qs should thus be decisive for trajectory. DXY successfully retested its June breakout for the first time. He stated last week, "The mother of all decisions is coming, expect huge volatility next week." The incoming DXY move will decide the fate of the crypto and stock market. DXY has yet to reclaim its 200-day moving average. However, the loss of which was recently described as lights out for the US dollar. Supply shock ratio nears 10-year high. Behind the scenes, Bitcoin is delivering subtle hints that all may not be so bad when it comes to overall network strength. According to the illiquid supply shock ratio metric, there is a higher chance of a major supply-induced rush for BTC than at any point in almost a decade. ISSR, created by statistician Willy Woo and crypto researcher William Clementi, attempts to model the probability of a supply shock forming, on-chain analytics firm Glassnode explains. Simply put, it assesses how much of the supply is available versus current demand, and given the ongoing trend of ferreting BTC away into cold storage, the signal is clear. As of December 10, ISSR measured 3.537, its highest since August 2014. Hayes says Bitcoin miner selling is over. The final silver lining for the future comes courtesy of Bitcoin mining research from former BitMEX CEO, Arthur Hayes. Related, Bitcoin's boring price action allows XMR, TON, TWT and AXS to gather strength. Thanks for watching. See you next video.